Time now for an in-depth look at the market news this afternoon. And for that, I'm joined on the line by Dr. Ha In, professor of economics at the Catholic University of Korea. Professor Ha, good afternoon. Thank you for coming on today.
Good afternoon.
Well, stocks in New York closed lower overnight. The Fed's announcement on tapering and rate hikes perhaps not having relieved the uncertainty as much as we thought. A big pullback in tech shares. What's the story in the markets and this volatility in particular?
Yeah, among the New York stock market indexes, Nasdaq has plunged most last night. Dow Jones Industrial Average was down by only 0.08%, and S&P 500 was down by 0.87%. Nasdaq plunged 385.15 points, which is 2.47%. The tech stock price has dropped significantly last night. Apple and Nvidia dropped 3.93% and 6.81% respectively. AMD and Qualcomm dropped 5.37%, 5.89% respectively. Frank Gress, the technical analyst at Wellington Shares, said that the market appeared to be in the leadership rotation from high growth tech names to other areas such as consumer staples. Although the interest rate on the government term bill reduced last night, the monetary tightening to stable inflation eventually would increase the interest rate. And if the interest rate would rise in the future, the price of growth stock would be reevaluated. But we can think that the current high inflation means that the demand for the consumer goods are resilient, and the demand for the consumer staples are inelastic to price. Therefore, the stock price of consumer staples products would not affected by inflation or monetary tightening. Korean stock market was mixed today. The Kospi rose 0.38%, which is 11.32 points. Kosdaq is down by 0.65%. Foreign investors bought more at the Kospi market while they sold more at the Kosdaq market.
Well, as you mentioned, the U.S. is getting ready to tighten its monetary policies, and with the Bank of England deciding to raise rates too, we're also looking to the next moves by the Bank of Korea. There are expectations of a rate hike by the BOK as soon as next month, though Governor Lee Ju-yeol said just yesterday that there's been no change in plans. What do you see happening with rates at the Bank of Korea?
Yeah, as you said, the Fed announced the speed of the tapering in double. Then the QE will end in March. And we can expect that the federal fund rate will be raised by about 3 times in this year, next year, I mean. Among the major advanced countries, the UK was the first one to raise its key interest rate. And already mentioned the Bank of Korea likely to raise its key interest rate again in coming January. For the year of 2021, Korean consumer price index inflation expected to be 2.4% according to OECD forecast, which is faster than the target level 2%. And due to the rebound of the economy, the unemployment rate is only 2.6%, which is the lowest since global financial crisis. That is why the BOK intended to raise its key interest rate. The interest rate on the Korean term bill with 3 years maturity is lower than 2%. And with the CPI inflation, it makes the real interest rate is lower than 0%, which means that the monetary policy is still expansionary. So if BOK want to normalize the monetary policy, it should raise the key interest rate. I think it's at least 1 percentage point, which means 4 times over 1/4% raise in the future.
Right, and you mentioned the signs that we have been on track for an economic recovery, but we're still far from out of the woods. A potential disruption coming in the markets and the economy from the Fed and the Omicron variant, the latter of which could have a bigger impact than monetary or fiscal policy. How do you see the pandemic playing into all this?
It is really hard to tell. I mean, the economy is shocked by the COVID-19 since March of the 2020. In order to prevent the pandemic, most governments enforced the social distancing or lockdown in the beginning. And the social distancing reduced the demand in the face-to-face service industries. This makes a big negative shock to the economy. But the economy rebounded since 2021. The advanced economy relaxed the social distancing and with vaccination, so the demand revived. But the new Omicron variant is spreading and the vaccine is less effective to Omicron variant. Then there is a possibility that the government are enforcing social distancing again, as the Korean government did. Then the demand will be affected as the beginning of the pandemic. Then there will be less inflation pressure, so there will be no need to tighten the monetary policy.
That's an interesting point, Professor. As you say, we are going back to strict social distancing here in Korea, and that's, of course, bad news for small businesses. They're going to have to get some financial support. That's on the way, but there's only so much the government can give them. So what does this mean for the economy, and what can be done to help?
Yeah, Korean government decided to give 1 million won to 3.2 million small business owners who are affected by the social distancing. And those small business owners who are affected by the business hour restriction will directly receive the grant by the end of this year. But those who are not affected by the business hour restriction, but say are affected, then they will be receiving support starting from the January 2022. Government would recognize the business owners who are supported by the pandemic emergency loans as if their sales are affected by this social distancing matter. And they said the detailed amount of support will be announced in the next week. But it is only support for the business owners. So the measure is not going to rescue the economy slowdown due to the tightening social distancing. Since the government support only the business owners, is not going to make a huge impact on the private consumption as a whole.
Right, and that makes sense. Professor, we're going to have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you for having me.